What is good, everyone? This is going to be episode number 1 of the A through Z trading course. Okay, so this is going to be people who are complete beginners in the market. So literally, I've never looked at a chart before. So I'm going to be going over candlesticks. I'm going to be going over just basic market structure for value gaps, inverse for value gaps. So if you are completely brand new to trading, this is going to be for you. If not, and if you already are familiar with some of the ICT concepts, then this is not going to be for you because we will be going over, the majority of ICT concepts and the real in-depth sauce in the actual mentorship. Okay, so let's get into this. When you first open up a chart on TradingView, this is what it's going to look like. It's going to look like some green, some red, and you're going to see candlesticks. Okay, you might see lines, but you want to be looking at candlesticks. So you're going to go up here. And this is on TradingView, okay? So this is called TradingView. You're going to download it on your, the internet. And yeah, get an account, get the essentials plan, and you're good to go. Okay, so this is, again, what it's most likely going to be looking like. I did not mean to do that. Okay, so when a candlestick basically looks like this, right? You're going to have a green candlestick and you're having a red candlestick. What this means is a bullish candle and a red candle. So the bodies... Remember this, the bodies tell you where the candle closed and opened, and then the wicks tell you where the candle actually went. So we're going to basically just, what I mean by this is, for example, right now, we're on the 15-minute time frame, right? It's 2:30. So every 15 minutes on a chart is going to determine 15 minutes worth of price action. So 2:30, 2:15, 2 o'clock, 1:45, 1:30. And then if we go on, the hourly time frame, it's going to be the same thing. 2 o'clock, this is going to represent 1 hour worth of price action. 1 hour worth of price action. 12, 11, and we can even go on the daily. This is today's price action. This is yesterday's price action. So this is the highest point in which price has traded to the whole entire day, and then this is the lowest point in which price has traded to in the entire day. And it didn't close there, and it didn't open here, right? But this is just the basics, right? And it even goes down to, the 5-minute, the 4-minute, 3-minute, 2-minute, 1 minute. So let's actually go into these charts here. Okay. So again, this is your candlestick. That's what it looks like. And a candle has an opening. It has a low. It has a close. Okay. So this is your opening price of a candle. You then create a low, you then create a high, and then you have a close. So this is what a green candle is going to be looking like, right? Because this is going to be your opening price. And your opening price on a green candle is going to be on the low of the body. And then your opening price on a red candle or bearish candle is going to be on the top, right? Because just remember this. Dude, why can't I type? If the candle closes below opening price, bearish. If candle closes above opening price, bullish. All right, so what I mean by this is the candle will open at whatever time frame we're on, right? So like let's go on the 1 minute, right? So this 1 minute candle opened here, and then we are trading higher. And let's actually go on the 5 minute, right? So this is 2:35. At 2:35, the candle opens. A 5-minute candle opens, and then this is the highest point in which price has gone within 5 minutes. I don't think the candle closed yet, right? You can see on the right here that we have about 1:40 left for the candle to actually close. But this is the lowest point in which price is traded to, right? So the candle opened. We then traded lower to create a wick. We then traded higher, and the candle hasn't closed yet. So we don't know when the candle is going to actually close until 1:30. But again, this is so far the highest point in which price is traded to. This could get even higher, and we can actually, sometimes we can even flip this and then go bearish, right? But as long as we are closing above the opening price, this is going to be a bullish candle. Right, so we can see 1, 2, 3, 4. So one more candle here, one more 1 minute candle, because I just went on the 1 minute time frame. One more 1 minute candle is going to determine 5 minutes worth of price action. Okay. So that's just something to know. And again, open, low, high, close. So open, low, high, close, and open, high, low, close is a term that you'll hear very, very often. And let's just mark all this out. This is going to be your close. This is going to be your high. This is going to be your low. And then this is your opening price here for a bearish candle. This is going to be your close. This is going to be your low. And same thing here. It's going to be your high. Okay, so for a bullish candle, it looks something like this. We'll have opening price here. We'll then trade lower, creating the lowest point which price action has traded to. But this is not where the candle is going to close, right? This is just going to be the wick. And then this wick here is the low. We then trade higher. We create the high. And then this is where the candle is going to close. So the actual candle, what it's going to look like is something like this. Well, I mean, that's a pretty small candle. We'll do it like this. Right, but you can see here, this is the opening price. Open. And then you have your low. High. And then you have your close. Okay. So again, open, low, high, close. And then this is going to be a green candle since we closed above the opening price. Right, since this close happened above the opening price, you're going to get a green candle. And then for a red candle, what it's going to look like is you're going to have a open, high, low, close. And again, you're not going to see this like perfect. Sometimes we'll flip this candle and you might think it's going to be bearish and then it turns bullish, right? But this is just how the candle looks very simply in like a little chart here. And since this is your opening price here, and we closed below the opening price, this is going to be a bearish candle. All right. And since we have our closing price here, the candle will look something like this with the wick at the highest point and the other wick at the lowest point. And the wick here is going to be at the highest point, in which price is traded to. And then the low here is going to be the lowest point in which price is traded to. Okay, so that's pretty much it for the first episode. Quick. This is going to be a pretty quick course. I mean, it's not that complicated, I hope. But, yeah, as you can see here, let's just look at this 5-minute candle, right? We had 5 candles worth of price action here. 1, 2, 3, 4, 5. And then this is the lowest point which price is traded to. After we opened, we traded lower. We then traded higher. And then this is the highest point which price is traded to. And then we closed right here. All right. Or open was here. And that's a bullish candle. And since we closed above the opening price, it's going to be a bullish candle on the 5-minute. And then, yeah, this is price here is fractal, so you can, go on the hourly, 4-hour, and do the same thing. 4 hours worth of price action here. Then 4 hours worth of price action daily, monthly. And yeah, that's essentially just how candlesticks move. And that is that. I don't really have much else to say for this video. Pretty quick, like 10-minute video. Next, I'm going to do market structure, basics of market structure. I think I'm going to do, actually, sessions is going to be really important, so I'll do that. But yeah, peace out.